Welcome back to another HBAR DeFi Corner where we get into all kinds of Hedera DeFi topics. Of course, I'm joined again by Brady, the founder of Bonzo Finance Labs. Brady, welcome back.
Hey, thanks so much for having me.
Of course, of course. I'm looking forward to getting into this one. We have a lot of stuff to cover, but as always, none of this stuff is financial advice. Use it for entertainment or educational purposes only. Also, understand the risks of DeFi before you get involved and the local laws and regulations in your area before you get involved in any of this stuff. But Brady, with that, let's go ahead and jump into some of the latest news that's happening in Hedera DeFi.
Yeah, so first thing off the list here, we've got Swarm Markets. This was announced recently by Hedera Foundation. I think there was a grant that was given, and Swarm Markets allows for tokenization of RWAs on Ethereum and Polygon and a couple other networks, and most recently was brought to the Hedera network. And it's tokenization of equities like Apple stock or Nvidia, Tesla, a few major trading stocks that are available. I think the integration with Hedera is happening in a phased approach. So one thing that I did notice really recently is looking at their website, there's a bridge section that you can go to. And within the bridge section, I think right off the bat, we're able to actually bridge equities from Ethereum to the Hedera network, and they end up on the Hedera network as EVM ERC, modified EVM ERC20 assets. And that looks live, and that's actually using Chainlink's TCP bridge be able to make that possible. They're modified EVM ERC20 because Swarm has created their own token standard that allows for specific regulatory needs and requirements for these assets. And I think from bridging perspective, there are two different types of assets that they have. One is qualified assets and the other is unqualified assets. Qualified assets require you to have a sort of like permission KYC process be performed in order for the account to be able to hold them. Unqualified assets are ones that are very permissionless in nature. You can bridge them freely over and you can use them within DeFi and various liquidity pools. We don't yet have liquidity pools set up in the ecosystem on like, say, SaucerSwap or Bonzo Finance yet for some of these assets, but I think that's something that's in development right now, at the very least, sort of being investigated to understand what the possibilities are with regards to these types of assets. And then, as mentioned before, this phased approach, the first step is being able to bridge these assets from Ethereum. They're minted originally on Ethereum and then brought to Hedera. Long term, it sounds like the goal is to be able to actually issue them natively on Hedera. And then also, as mentioned, the qualified assets, being able to have issuance of qualified assets as well.
Well, Brady, one of the things that you just told me is these assets aren't just going to be in a walled garden managed by Swarm, but they're going to be able to be used in all of DeFi. And this kind of turns what I saw the disruption in traditional finance be. It turns it on its head because I thought, we had the initial Web3 proof of concepts with NFT marketplaces and DEXs, and then we saw it go into some commodities. And then the next thing that's going to be coming down the line is like the Kenyan Digital Exchange is going to launch. Now, that's one of the Hedera governing council members who's doing that, the Nairobi Securities Exchange. And then I thought they would serve as a proof of concept for the FTSE and the New York Stock Exchange, the NASDAQ, and so forth. But this actually sets up SaucerSwap and the DEXs out there as those disruptors themselves, not just as a proof of concept of what can be, but them actually serving as the disruptor for traditional finance. And I think that is absolutely massive. Speaking of DEXs and SaucerSwap, another disclosure I have to make is I just got a contract with SaucerSwap working on some outreach for them. So this show is not just going to be supported by them, but I'm actually going to be part of the SaucerSwap team going forward. But back to my point, again, allowing these DEXs like SaucerSwap to become disruptors themselves. So I'm really excited about Swarm.
Yeah, really excited about it too. And I've had some catch up with their team over there and dove into a little bit of like how they're thinking about the future, the architecture that they have, things of that nature. And it does, you talk about like the future of DeFi, and it does make a lot of sense, at least in my mind, in terms of how they're architecting their platform, whereby going through like a KYC process, for these qualified assets, users receive a soul-bound NFT token to their wallet, which effectively signals that the account is authorized to be able to be trading these assets. They can receive the asset, send the asset. But I think it could also extend to like pools as well. So, if you imagine DeFi in the future maybe looking like a walled garden, and there's entry and exit points, and maybe one of these entry points is something like getting authorization to enter. That may be a KYC process. You receive a soulbound token to your account. Once you're in, everybody else within that garden, including the protocols and the users and their accounts, are able to sort of freely exchange all of these assets because everybody's been, authorized. Everybody's able to be able to touch the assets. They can do whatever they want with them. And then within that garden, you have sort of permissionless DeFi. You can take your assets in your wallet. You can go to a lending protocol. You could go to a decentralized exchange. The exchanges and the protocols themselves are the pools are authorized to be able to actually hold those assets. And so I could totally see this kind of being the beginnings of what maybe the future of finance actually looks like, where we still retain that permissionless nature, but there is a sort of regulatory aspect to it that ensures that everybody who's participating is, an individual that's been authorized to be able to participate, at least based on like jurisdiction.
Yeah, it's true innovation. I am in touch with Hanya with the Hedera Foundation, and she's the one who's working with Swarm. We're going to set up an interview. So if you have any questions around any of this stuff, go ahead and drop those down in the comments, and I'll see if I can get them answered for you. And Brady, the next thing we're going to touch on is Orbit, which finally went live on mainnet. What's the significance of Orbit coming online here?
Yeah, really excited about Orbit. I've been talking with their founder for a bit as they've prepared for launch. Orbit acts as sort of like a protocol and front end layer that sits on top of the SaucerSwap AMM. So, what their protocol layer and their front end does is allow for the ability to perform limit orders off of the liquidity that exists within SaucerSwap. So, users can go in. They've shown a couple demo videos that I'm sure you'll have on display here right now, but go in, be able to set limit orders for any of the supported pools. Those trigger when prices hit the specific price points. It creates another level of sort of automation within the ecosystem that we did not have before. And then I know also SaucerSwap is looking to try and do sort of order book style limit orders as well. So, a lot of this functionality, it'll be amazing to be able to be exposed in, different front end interfaces.
People are just generally more used to the way limit orders work if you're used to the traditional financial system or, centralized exchanges and so forth. So yeah, these limit orders are going to be important, and people are going to have preferences as to which one of these user interfaces they use. Now, of course, SaucerSwap is getting that liquidity, so it's certainly a huge benefit regardless. But the other thing is I do have an interview with the Orbit team. So if you're curious around anything around that, you can go ahead and check out that interview. But moving on here, Brady, the next thing we wanted to touch on is we haven't had too many mergers in the Hedera space, in the Hedera DeFi space, but we saw one this week. What do we have there?
Yeah, so there's been a merger between HGraph.io and EdaBridge, which is awesome to see. So EdaBridge is an application that's sort of within the EdaSwap ecosystem. EdaSwap is a DEX aggregator. EdaBridge uses Layer Zero's cross-chain infrastructure to be able to bridge what is today Hedera native USDC and the native USDC on, I believe, 3 or 4 other networks. So, there exist pools on all of the networks that are supported of native USDC. Users can go in, bridge that native USDC onto Hedera, bridge it out into another network. In observing that and kind of watching it over time, the liquidity has been a little bit thin with regards to, native USDC across all of the pools. But it looks like from comments from HGraph.io, they are working to try to figure out ways to both increase the liquidity for this bridge and then also the rebalancing aspect of it. So when you are using the functionality of Layer Zero in a way where you're locking liquidity on one side and minting and unlocking on another, depending on where the heaviest usage is in terms of direction of the flows for bridges, you may need to be moving that liquidity around to try and ensure that there's sufficient amounts on every network to make it usable. Huge fan of the HGraph.io guys. They've been in the ecosystem for a really long time. I think they're going to be able to sort of take EdaBridge to the next level. And obviously, Danilo also, who created EdaBridge, is awesome. I've had a few conversations with him, and he's going to be in I think, an advisory type position as well. So yeah, just really excited about this, and also seeing what else they can do to beyond Hedera native USDC. I know they're trying to look into support for additional assets and just alignment across the ecosystem. I think around layer zero standards. With bridging infrastructure, you want to try and create standardization across the entirety of the ecosystem to ensure there's not like 3 layer zero contracts for the same asset, which results in 3 bifurcated versions of the same asset. So there's a lot of work being done on the coordination front to just ensure that we all sort of acknowledge which contracts for layer zero are considered to be like the canonical OFT contract for a specific asset.
What I like about this, Brady, is, there's a lot of teams out there that they'll launch something and it's really not a company in itself, but it's a fantastic feature that could really impact other platforms that we have out there. And that's exactly what we're seeing here. EdaBridge is a fantastic feature that can enhance what we're seeing coming out of HGraph. So I like this one. I would also like to see them grab a hold of SaucerSwap. Now, that's another thing that was launched by Danilo. Of course, it has a similar name, but it's a DEX aggregator, which, it goes and tries to get the best deals from different DEXs within the Hedera ecosystem. And it can provide better deals in a lot of cases. And I actually do that. Now, of course, it's getting most of its liquidity from SaucerSwap, but there are other DEXs out there like HSuite that can provide liquidity, and there could be arbitrage opportunities, things like that SaucerSwap can take advantage of. So it's really good to see this. The next thing we're going to jump into, and we can't ignore this because it's really exciting, and some people might not think of it as DeFi, but it absolutely is, and that's in our NFT space. And we're continuing to see the concept of the forever mint have an impact on the NFT ecosystem. It's having an impact, of course, on total volumes, on our different NFT marketplaces, and of course on the projects themselves. So what do you have on that?
You're right that NFT ecosystem is outside of the sphere usually of DeFi, but it is such an amazing innovation on the network, and it's driving so much interest and adoption and retail usage that we have to cover it. These forever mint concepts that Dead Pixel Ghost Club came up with in conjunction with Centex and Kabila Market, the ability to be able to use the royalty fees earned from their NFT project, the sales of their secondary sales of their NFTs, to buy back their NFT, repackage it in a random number generator pack, and allow it to be repurchased, creating this like cyclical flywheel effect and sustainable business model for NFT projects without having to like dilute the market by minting more and more and more NFTs. As soon as Dead Pixels Club announced it, I think towards the end of last year, I was like, yes, this is an incredible business model, an incredible concept, great use of some of the functionalities of the Hedera network. And they really started to pick up steam, and that flywheel kicked off just over the last month or so. Insane amounts of volume for their NFTs. And now it's being adopted by additional projects in the Hedera ecosystem very quickly too, because I think this kind of kicked off the last DeFi corner a couple weeks ago, and already 2 projects, Wild Tigers and Just PFP Art, have implemented forever mints as well. And as soon as they were implemented, volumes skyrocketed for these NFT projects too. So hopefully we just keep seeing more and more projects pick up forever mints, and that flywheel keeps spinning. And then the point of like the NFT ecosystem and the DeFi ecosystem, it's very often that you see a boom in one resulting in additional users in the other. And so the boom in the NFT ecosystem is incredibly noteworthy for DeFi in the sense that those retail users that are coming over, I think, are also going to be using things like decentralized exchanges to swap assets. They're
Of
introduced
course.
to a Hashpack wallet and Kabila wallet and the dApp browsers within those for all the different applications that exist on Hedera. So overall, it's just an amazing distribution model, I think, for getting retail users onto the Hedera network. And super cool to see, especially at a time where kind of every other network with NFTs is not really doing the best. So it's cool to see sort of a renaissance happening on Hedera here.
Yeah, no, it's true innovation. We were talking about this before, that this is why I have so much faith in the Hedera retail ecosystem, because there's so many really great builders out there that come up with innovative ideas, and they're grinders. They will figure out a way to be successful. And I know in the long term, that's going to allow Hedera to be successful as well. But of course, I have my own NFT project, the Bulbarians. We're not mature to the point where we can have a forever mint. We're going to have some additional mints, but I want to get there as soon as possible, because it does seem like a really fun way to keep the community engaged. But yeah, it's been really fun so far. All right, so now we're going to kick on over to SaucerSwap. I have a few things on SaucerSwap, but what do you want to cover?
Yeah, so the latest news with regards to SaucerSwap, we've been following all the updates that they've had, over the last couple months now with regards to the new brand that's sort of being launched, new front end interface that should be coming soon. And then also this application that they're launching, a native mobile application, I think for Android and iOS. There were audits that were just completed by FrontStamp for this application. So, one step along the way to being able to launch this and make it available to users.
Yeah, no, exciting stuff. And that's exactly what I was going to get into. I just got word that it looks like that application, that app is going to launch next month. So it's supposed to be in September. You know how those things go. It might get pushed into late September or early October, but either way, it's coming pretty quickly. The other thing that I wanted to touch on is the limit orders that you mentioned earlier. That's supposed to come out in Q4, and then we're supposed to get perpetual futures in next year. So SaucerSwap continues to innovate. They continue to make sure they have additional features coming out that are useful within our DeFi ecosystem. So the last thing we're going to cover before we get into some yield opportunities is something that just came out yesterday, and that's, I'm not sure if it's pronounced Kia or if it's KEA, but I was happy to see this because it's something that is exciting for the Hedera retail ecosystem because it's at the intersection of AI and DeFi. So what was your take on this?
Yeah, so I'm still sort of reading into how Kia works and who
Yeah.
the audience is for this. It does look like it's a DeFi or fully decentralized protocol that's underlying it. When you open up the application, you're connecting a wallet in order to actually get in and start using it. It looks like it is the ability to essentially tokenize assets and then make them available from a lending perspective. And then it uses AI as part of it for some risk management or analysis. So do need to dive in more to like fully understand exactly how this works and what the specifics are. But there was an announcement just recently with regards to its availability. So excited to check it out.
Yeah, of course, I'm going to reach out to their team and try to get an interview, do a deep dive on exactly what they have going on. I couldn't really figure out. It certainly seems like there's lending involved here, lending and borrowing. I'm not sure if it's tools for lending and borrowing or if it's the lending and borrowing itself. It also seems like it's an intelligence company giving information to the users of the platform. But again, we have to do a lot more digging before we figure out exactly what's going on there. But we have a new player in the space, so that's always good. Now we'll take the opportunity to jump into some of the yield opportunities we have in Hedera, starting off with SaucerSwap. So we're going to start off with V1, which gives you the full span of pricing between the two assets in a given liquidity pool. For Sauce HBAR, you have just about 14%. USDC HBAR is at 20%. HBAR BSL is at 18%. Now, before I cover BSL too much more, I do want to get information around some of the security concerns on their platform, but I saw that number one, their liquidity is fairly high at $1.7 million, and their APR is at 18%, so it was worth covering. Next up, we have HBAR X Sauce, which is at 11%. HBAR Karate. Now, the V1 for HBAR Karate doesn't have a lot of liquidity, but we'll talk about that more in a minute. It only has about $60,000 in liquidity, but it has a pretty darn good APR at 68%. And then we have a few meme coins that are doing well. Number one, Gib. There's a few things I want to say about Gib. Number one, it's been going up and to the right, so its performance as a token has been doing really well. It has decent liquidity with over $500,000 on SaucerSwap, and the APR is at about 18%. It is becoming the main meme coin on Hedera. No offense to Grelf, but they're both doing well. But Gib is pulling ahead here. I'm pretty impressed thus far. Then we have HBAR Dino has a good APR at 40%, and HBAR Jeet, which goes along with a new meme we have in our space, is at 18% for V2. And this is, again, concentrated liquidity. So from a week to week basis, it's hard to make comparisons, but I do want to make sure that this is getting out there. USDC HBAR is at 80%. We have USDC Carrot, which again, I think there's an arbitrage opportunity happening here because it is actually backed by physical diamonds, 154%. But the liquidity is very low on that one, only at $5,000. Sauce HBAR is at 13%. HBAR Bonzo is at 4%, HBAR Pack at 87%, Wrapped ETH USDC is at 87%, HBAR Dovu is at 27%, and then HBAR Karate, and this is where most of the liquidity is for Karate. It has about $650,000 worth of liquidity, but it has a much lower APR, which is odd to me, at only 4%. Brady, before we move on to Bonzo, do you have any thoughts on any of those tokens or the liquidity pools, APRs around the tokens we just covered?
No, nothing else right now. Just I'm excited in general just to see all of these new applications coming online, the Forever Mints for NFTs. I feel like it's a pretty exciting time for the ecosystem.
Yeah, good stuff all around. So now we'll move on to Bonzo, and you're only providing one token for this one as opposed to providing a pair, which comes with the risk of impermanent loss. So let's dive into that one. So if you're providing liquidity for HBAR on Bonzo Finance, you're getting about 0.6%. So it's better than a bank account, but not the greatest yield in the world. USDC, you're getting 4.5%. Bonzo itself, you're getting close to 10%. Sauce, you're getting 0.5%, as well as Pack, you're getting about the same. For Grelf, with an extra kicker, you're getting about 3.5%, and the Kabila platform token KBL is giving you about 5%. Now, Brady, one of the things that I'm noticing is these red numbers under the liquidity. Now, that means it's hit the limit of the amount of tokens you can borrow. Is that correct?
Yeah, so within Bonzo Finance, there are supply caps and borrow caps that exist in the protocol as part of the risk parameter settings that are set by the independent risk steward who runs analysis on the ecosystem, the protocol, and individual assets. And they author change memos that are available in the Bonzo Finance documentation as well as in the notification center in Bonzo Finance on the dashboard. And those parameters are set in a large part based around sort of the existing liquidity or secondary liquidity within the ecosystem on a per asset basis. So certain assets that are supported within the lending protocol may have less liquidity available, for example, in SaucerSwap or, limited or thin order books on centralized exchanges, which limits how much can actually be collateralized and how much can be borrowed in order to protect the protocol, the users, and the asset and just overall the ecosystem. So yeah, there is indications within the platform that showcase, hey, this has hit its limit in terms of how much you can supply or how much you can borrow. So definitely observe those if you're going to be using the protocol, where it'll prevent you from being able to supply or borrow if those limits have been hit.
All right, understood. Now, of course, not financial advice, but if any of those yields seem enticing, you don't have to worry about that impermanent loss we were talking about before. And if you want to try to open things up so people can borrow some of those tokens again, you can go ahead and supply some liquidity. So, Brady, now let's go ahead and jump into some of the metrics out there that show the health of the Hedera DeFi space.
So jumping into overall TVL on the Hedera network, we're looking at about $236.87 million. In US dollar denominated value, that's going to be fluctuating a bit more, just given the fact that the prices change for HBAR and various assets on the network. In a HBAR denominated value terms, it's about 1.049 billion HBAR in TVL, and that's inclusive of liquid staking and borrows. It's still kind of crawling to the side. We've seen some mild fluctuations when you look at HBAR denominated value. But we'll keep watching this and reporting every couple of weeks in DeFi Corner.
Sounds good. What do you got next?
Cool. Monthly DEX volume is next. So we did see a bit of a dip during the middle of the cycle that we're currently in. We closed out August of 2025 with $354.23 million in DEX trading volume. And in HBAR denominated terms, it's about 1.441 billion. So, we're up from that middle cycle dip and just about the same as the month of July. And, hopefully the cycle continues and we see sort of this tail end throughout the end of the year and maybe even early next year, but we'll see. But my hope would be that this trend kind of continues back up towards where we were back in like November, December, January period.
Again, I think we have a lot of tailwinds. We have the US altcoin ETFs that are supposed to be coming out. We have the government getting involved on a bunch of different levels. And it seems like the acceptance from especially the US government is kind of opening the doors for a lot of the enterprises to get more involved as well. So I think we have some exciting times ahead.
Yeah, no doubt. Next up is stablecoins. So on Hedera, native USDC has been the stablecoin of choice or the focus. We split this out into two metrics. The first is stablecoin TVL, which is the amount of Hedera native USDC that is locked in DeFi protocols on the network, primarily SaucerSwap, DEX, and Bonzo Finance Lend. And then the second is the liquidity, which is just the overall circulating supply that is technically usable within the Hedera ecosystem, and that's at about 127.74 million. So in terms of stablecoin TVL, we have here broken out SaucerSwap's liquidity over time of Hedera native USDC, and same for Bonzo Finance. And so, we can see over time, there's definitely strong, stable growth here. There's your consistency when it comes to TVL as a metric for stablecoin liquidity. And it also, I think, is just more indicative of actual usable USDC liquidity within the ecosystem. If it's locked in a protocol, it's able to be used for things like trading or borrowing. So you definitely, from past DeFi corners as well, consider this metric to be sort of more of a gold standard in terms of evaluating USDC within the ecosystem. In terms of stablecoin liquidity overall, we're sitting at about 127.74 million. You can see on this graph, we've seen a lot of volatility over time, but ultimately the trend is up and to the right. Every time it has gone down after a larger spike, it typically resumes at a level that's a little bit higher than the last time it went down. Not exactly sure what specifically is driving the spikes and drops. We've speculated, institutions most likely using it for various purposes. Maybe it's, migrating it across different chains for various usage, but can only really speculate at this point.
Until we get some more transparency around this, I've just gotten burned too many times, getting excited and seeing it drop and just that volatility in general, and just not knowing exactly what's happening behind the scenes. Unless we get some more transparency, I'm just going to put this number up here. People can make of it what they will, but I'm not going to put too much weight behind it. Again, I think that the last metrics we were looking at are probably more important because we know it's being used in our DeFi ecosystem.
Yep, on the same page as you for that one. And finally is staking. So we have liquid staking with Stater Labs' HBAR X, which is a liquid staking token for HBAR, and then native staking on Hedera, so staking to network nodes. Liquid staking sitting at about 4.34%. You receive HBAR X for staking HBAR, and then you can use HBAR X across the DeFi ecosystem, or you can just hold on to it in your wallet and you earn that 4.34. That's realized when you unstake and receive your HBAR back. And then native staking on Hedera, you stake your account to a network validator node, and all of the HBAR that is in your account is accounted for when receiving this reward. It's distributed on a 24-hour basis, or rather it's accumulated on a 24-hour basis and then distributed upon anytime a transaction takes place for the account. It gets deposited into your account with that transaction.
So, Brady, I took the opportunity since I had Mance on to kind of lay out his vision of what's going on, and I asked him about staking. He gave me his opinion. I gave him my counterpoints around it. One of the things that I was excited about that is he said that there are people that are looking at more yield opportunities for HBAR holders. I don't know what that looks like. He didn't go into any more detail, but it was good to hear that people are looking at it.
That's great to hear. Yeah, I think there's a lot of folks that have wanted to see native staking, the APR there go up, but it sounds like maybe too there's other opportunities that they're looking into with regards to alternatives to staking or something that aligns with it. So that's cool.
Yeah, I'm looking forward to it. It leaves something out there for us to look forward to. Brady, is there anything else you'd like to cover before we jump off?
No, nothing else. Just excited for, watching the NFT ecosystem continue to, continue on its path. And then all of these protocols that are coming online too. There's always something new to check out and explore. So, it's great when that's the case. I love trying to play around with different applications that exist on the network and new things that come online. So there's definitely a couple of them like KEA to check out. And I'm sure there's going to be more, in the coming weeks and months.
Yeah, more stuff coming all the time. I do want to say that this is great to have this one-way communication, letting everybody know what's happening in the Hedera ecosystem. But it is good to have those conversations and get questions from the community and everything else. So we're going to start, the HBAR DeFi live on Mondays at 3 p.m. Eastern. That's going to start just tomorrow, so you guys can hop on for that. It's going to be an X space. You can come on, ask us any questions you want. I'm going to be on there. We're also going to have the Head Starter team, which of course is one of our launch pads, and the Meme Job team. Of course, they're rolled into one. But you can ask me questions around SaucerSwap. Brady might be on there from time to time. It sounds like you're going to come on for tomorrow. You can ask about Bonzo, and then you're going to have the launch pad on there as well. So we're going to try to turn things up and get people more and more excited about Hedera DeFi because we have a lot going on. But Brady, as always, thanks for hopping on, and we'll see you in a couple weeks.
Thank you. Appreciate it. See you guys soon.